Welcome to Trading Lounge and the US indices, and with the SP500 here on the daily chart. What we were talking about last week, we were talking about a top being in place, but we just wanted to double check and make sure before we start shorting that we're on the right track, because all of this is fine from wave 4 here, up for wave 1 and back for wave 2, then up for wave 1 and back for wave 2 here, and then we were looking for up for wave 3, 4 and 5 to make the top of wave 3 there, and all that's fine. The only problem is anything that was unclear, and I want to make allowances for it in our strategy, is wave 4 can be here or it can be here. Now if it's here, then that top there is finished and we'll be pulling back to the wave 4 of 1 lesser degree, moving down here further. Okay. However, if wave 4 is here, then we need to look at this as 1 and 2 and 3 here, and wave 4 here, and then wave 5 up here further. Right, so what we decided last week in a bit of a nutshell, that if the 2,400 became the retested resistance, we'll be on the short side from there. And that was a fair comment because there's lots of support here. Okay, and that's still the scenario in here as well. So what we need to do is we need to drill into this little area here and get some logical sort of strategies that will either get us short or get us long. That's the main thing. Also too, as you're aware, there's the 4th of July holidays this week as well. So, you know, we could see some light volume in the day before. So just be a little bit mindful of those holidays and what you're doing in that space. So, yeah, if I go to the 4-hour chart here, I know that we've been over this before, but so from this wave 4 here, wave 3 here's an A and a B and a C here for wave 4. We can have wave 1 and 2 and 3 and 4 and then all the way up for 5 here and finishing it. And if that's the case, then as I mentioned, you know that we'll be coming back down to the wave 4 of 1 lesser degree here. Okay, so that's quite exciting in that regard. But however, if this wave 4 here is sitting here, then if wave 4 is sitting here, then we need to look at this as wave 1 here, wave 2 here, wave 3 here, and then we need to look at this as an A and a B and a C for wave 4 here, pulling back into that. Well, our target was the 24.10, so we got a bit of a spiky sort of thing into that, so that's fine. So yeah, we're left with two directions here, and I think it's important that we're sort of mindful of both of them. I know that other Elliott people might be set in their ways and have this one or that one and so on, but I just think it's a really important little time to be, you know, to think a little bit further ahead and get strategies that suit both of them. So with that, I'm just going to go into the 15-minute chart here, and we'll just work out what we can do within this space here. So this is the 15-minute sort of chart here. So we're either finished this wave 4, as I've mentioned, and we're going straight up through here, or we're just going to come up to the from that high to this low here, the 61.8% retracement level at 24.30, and then we come down from that point. Okay, so that's what we need to talk about a little bit. So this little move up here, it certainly can be counted in an ABC pattern here as such. So let me just sort that out a little bit. I just need to look on the cash market. I always like to double check with the cash market before, when things are a bit dodgy on the other one. So yep, so it's actually this one, and wave C here. So it's possible that that's a top in play here. And this little move down here was, you know, on the close. So even though it looks impulsive, we need to take it with a pinch of salt. So look, that's the 61.8% mark. So I reckon that anything breaching above that there. So you would also know that the 30 here is group 1. So of 2,400, 10, 20 and 30. So we know if there's a tested support developed on the 30 here, then we can go to the upside there. If you want to refine that number there, you can go to 33. Okay, 24.33, especially if you're working with the tick charts and so on. So that would be the long trade. On the short side here, the first instance is from this low here, from this high here. This box here is the lower end is the 61.8% mark here. So I could say that if we took the 61.8% mark and drifted off to the closest largest number over here, that would leave us at 24.15. So if 24.15 becomes the retested resistance, well then you can go short from that area. Okay, so that's those two setups there. Don't short it just because it touches it. You basically want to see a retest, you know. So if the market moved down below the level like it did here and then went back up here, then you can draw a line across here, and then if it's breached, you take it that way. That's the safest way. So with that in mind, they're the two kind of safe trades within that space there. If you wanted to move in a little bit closer, but there's risk there. The risk would be that, I mean, you can just continually to move in and in and in, you know, but that I'm just saying that's sort of where the risk is there. So in here, this is the 50-60% retracement level here. I can draw on this, it's 15-minute chart here. So you'd need to have a look on the tick chart to see if you get 3 waves up to this point here. So you could sell it at that point. That would be the optimum thing there, but you don't really have any proof of anything at that stage. You know what I mean? So you're at risk at that stage. This market could reach to here, then come down into this space here, and then move off from that space. Okay, so what you also could do here by drilling in a little bit further is come into the second strongest number here, which will be, well, from 20 and 30 is 25 here. This is all group 2 here, isn't it? So you'd work the 72 here, 65, 72 and 80. So, well, yeah, the 8 here, and so on from that point. But if the market moved up to here, then came down and locked under the 25 here, then you had the right setup here where it comes down, goes back up and retests, and then breaks into a new low. So you can get a position into here. There will be a bounce off the 20 when it gets here as well, but you could do the same thing here. And that number there, the 24.22, if that becomes the retested resistance, that's where you could add again at that particular point, and then under this one here again. So you could be able to get 3 positions in here really safely. You might end up being at the end of the day breaking even or losing a little bit, but you would have 3 positions in there if you felt that, you know, it was going to be bearish at that particular stage. Yeah, so anyway, that's it in a nutshell. The Nasdaq's a bit the same as well. Let me find tech stocks here. So if I just go to the daily chart here for a moment, just so we've got the bigger picture here. I was looking at it like this here, daily chart, Nasdaq. So much the same, wave 4 here, wave 1 and 2, then 1 and 2, and then 5 waves all the way up here, 1, 2, 3, 4, 5 to the 5th wave for 30. So this market can pull back to the wave 4 of 1 lesser degree here as well. In some type of correction. Now we also need to understand too that wave 4s can get a little bit complicated, especially if wave 2 was quite simple, which wave 2 has been simple. So wave 4 could be complex here. Much the same scenario, but here here is more clear here because this move from this move here of 1 and 2 and 3 and 4 and 5 here, to me that's really quite clear here. So really this would suggest that the S&P does have a top in place, and this is not wave 4 and it will come lower based on the Nasdaq's wave count here, because when we were, so just keep that wave 4 of 1 less degree in mind there, because when we were coming to, I think it was the hourly chart here, I'll just bring this into 1,000 here. Well, wave 1 was clear, wave 2, so it's the wave 3 here. The wave 3 was really long here, and then the wave 4 and then the wave 5. So we had a really beautiful wave count here. So that's why this would be the same here as well, looking for a rally up into this box and then dropping from there. So really we're looking to short weakness in these markets. It's just a matter of finding a way in, and you definitely want to make sure that you're selling into weakness rather than trying to pick tops as such. So all right, I'll leave it at that. Cheers.